I do want to pivot to an economic concern you've brought up a few times in this conversation, and that's inflation. We've seen stubborn inflation for the past year and a half. So how are higher prices impacting insurance?
So most directly, simply the increase in the costs of lumber to repair buildings, the cost of labor, and other costs involved in replacing these buildings has a direct impact. In the automobile industry, we are finding that because there's a lot more technology in cars today, that it's more costly to replace those components. Now, another related factor is that because of the volume of incidents that we've been experiencing, the demand surge for certain products and labor needs is also adding costs to what's necessary to repair and mitigate that. So all of those have a direct impact on the costs for the insurer. We track, as one of our businesses, local materials costs and local labor costs across a wide range of functions that are necessary to repair and remediate damaged properties. And you can see these surges in demand impacting prices. That's the immediate effect, but also recognizing that inflation is a compounding element. A 4% increase annually in replacement costs over 10 years can contribute to a 50% overall increase in the cost of that repair.
When you're looking at these two factors, extreme weather as well as economic concerns like inflation, what do you think the bigger risk is? Because you said extreme weather is going to happen with more frequency, but we do know inflation does tend to come down. So when you're looking at this, what's the bigger risk?
I think that you have to look at the weather event as the primary cause. And so if we have more thunderstorms, more hurricanes, and particularly as we look at Hurricane Ian in 2022, which was the largest hurricane impact since Katrina, we saw a much larger, slower moving storm that dumped a lot of water and created a lot of flooding damage. So I think you have to start there. But inflation will, if sustained for a long period of time, will magnify that cost. Now I'm going to add another element to what you've described. The other thing that we are looking for, certainly in the U.S., but also on a more global basis, is how political risk and social risk can magnify the risks of a disaster. And an example that I'll use is in Turkey, we had a series of earthquakes. In a region where you may have political risk, you also have a higher risk of corruption. And that sometimes translates into not maintaining building codes to the levels that are necessary in order to protect a building in the event of an earthquake. And so one thing that we are looking at beyond the economic impact and the climate or weather impact, but also the impact of social and political risk and how that can magnify things. That also, I think, is a relevant concern for a lot of corporate leaders, that they understand in the locations that they are operating in, how could that affect their operations, their resilience in responding to a major weather event, and could it expand and become a very dangerous place for their employees?